Oh boy, do we have a lot to get into here in this video. Tesla stock is in the red. This is actually bullish. Ladies and gentlemen, we need to go over this information as well as the data that came out today, new price targets on Tesla stock, as well as some very bullish option activity. So, I hope you are ready. If you are not, you better get ready. Hit the like button and subscribe to the channel if you want to grow your net worth, if you want to make more money, if you want to stay up to date with everything happening in the markets and with Tesla stock, and last but not least, reach financial freedom as quickly as possible, baby. That is what we are all about. So you can kick back, relax, enjoy a margarita on the beach or whatever your drink of choice is. Let's get into all of this information. So first things first, I think we should start with why Tesla being red is a positive. Now, it's specifically what Tesla has done over the past 2 days. Tesla has fallen to that 250 level, and that was yesterday during the FOMC press conference, bounced at that level. You traded around 256, 255 in after hours. You sold off in pre-market today, hit a low of 247.29, and then what happened? The first minute you started trading, you jumped back above $250 per share. $250 per share is a major support level. You're currently trading at $256. So you're seeing this wave-like motion. Now, big question is, why is that bullish? Well, Tesla was the most overbought stock on the NASDAQ. What you have seen just with Tesla literally trading sideways in this wave-like trading pattern, you've seen the RSI come down, and the RSI coming down will give the stock that room to make that exponential move higher. So if you're someone that is betting on Tesla going over 300 or 350, as I am myself, you need to see the RSI coming down. And that's what I have expressed very vigorously over the past week. You have to see this happen in order to get that next move higher. And in the process of bringing the RSI down, if you hold your key support levels, in which 250 is Tesla's major support level, that is the real bullish part. If you start to flush under that, that's not going to be so good. Now, you have to consider what's happening as well in the broad markets. If we were to get bearish in Tesla, well, what's the reasoning for that? In which we're not. But it would be economic data. It would be things such as the Fed. And we had the Fed yesterday. Markets are digesting what the Fed said. And really, in a nutshell, terminal rate is signaling we're going to need 2 more rate hikes to get up to 5.6%. The summary of economic projections predicted a better economy, for GDP to actually be higher than what they expected in March, and for unemployment to not go up as much, which are positives for Tesla's business. I cannot reiterate this enough. I would rather have a strong economy with people working rather than not as many people working, a higher unemployment rate, and lower interest rates. Tesla's going to sell more vehicles if people have jobs. That's the simple fact to it. So while the markets are kind of reacting to the terminal rate going higher as a negative thing for Tesla, not really a positive thing, I think the markets are soonly going to realize more people, more jobs. That means Tesla's going to sell more vehicles. So this is something I would take as an opportunity to load up on some of those bullish bets. Now, we got more economic data coming out today, and we're going to get more of that coming tomorrow, in which will also be very important. Biggest piece of data that we got today was retail sales month over month for the month of May. You were expecting negative 0.1%. It came in at positive 0.3%. So good retail sales, kind of pushing back on that recession narrative in line with the Fed's summary of economic projections, so showing the economy is going to be better than what they previously expected. Now, things were not all great with the data that we got today because we did get a lot of data. So the New York State Manufacturing Index came in at 6.6. You were expecting negative 15.1. Again, a good sign for the economy. Initial jobless claims for the month of June 10th came in at 262,000. You were expecting 249,000. So quite a bit of a jump there. And if that trend continues, it's not going to be a good sign for the labor market. Now, Philadelphia Fed Manufacturing Index came in at negative 13.7. You were expecting negative 14. Not the best reading, but it could have been worse. Philly Fed new orders came in at negative 11. You were expecting negative 15.8. Again, not great, but it could have been worse. Philly Fed prices paid, though, came in at 10.5. You were expecting 9.5. That is pretty recessionary data. Philly Fed employment came in at negative 0.4, expecting negative 4.4. So a lot of this data that came out today, especially the Philly Fed data, you can kind of boil it down to it was not good, but it could have been worse. And that's kind of what the markets have said to all data points throughout the last year and a half. It's pretty bad, but it could be worse. Now, the Fed yesterday, as well as the data that we are getting today, has fully priced no rate cuts into our markets in 2023. Now you are expecting the first rate cut January 31st of 2024, and that sits at a 42.4% probability. Now you are pricing in a rate hike coming July 26th, and that's it. You're not expecting the Fed to raise rates again in September, nor in November, nor in December, and then a rate cut in January. So even though the Fed said 2 more rate hikes, markets are still only pricing in 1 rate hike, but now they're no longer pricing in a rate cut like they were before the Fed pricing in a rate cut for November and possibly even December. So I think this is a very fluid developing situation as we get more comments from investors, as people digest the Fed a little bit more. This is going to move around quite a bit. It will affect our market, so we will keep you guys up to date with all of it. Tesla. Let's switch gears and talk about the price targets today. And boy, is it exciting. This article says Tesla stock rally snaps. Analysts signal it may be recharging for a long-range haul. Now, if we just skip down, it says that RBC Capital analyst Tom Narian Thursday morning raised the firm's price target on Tesla stock to $305, up from $212. That's a big price target increase. The target is 19% above where Tesla shares closed Wednesday. Narian maintained an outperform rating on Tesla. The analyst cited Tesla's full self-driving capabilities and its robo-taxi plan. Narius wrote Thursday he conservatively estimates 25% Tesla robo-taxi penetration in the U.S., driven by consumers switching away from private vehicle ownership. Dan Ives also maintained an outperform rating and a $300 price target for Tesla stock today, saying, quote, Tesla's recent surge is a recognition from Wall Street that with the Ford and GM supercharger partnerships, Tesla's sum of the parts valuation is now finally starting to get tapped into. And goes on to say that this could add $3 billion to services revenue for Tesla and the recharging of vehicles over the coming years. Now, what the sum of the parts valuation essentially is like an Amazon, where you have the core business of Amazon, but that is valued lower than their AWS, which is really growing, their kind of software business. Or like an Apple, where Apple's hardware business of selling phones is valued lower than their services, their recurring revenue sector. And what Dan Ives is saying is that people are starting to value Tesla as separate businesses within the same business, like the charging section is starting to be valued at a certain rate, and their vehicle business is starting to be valued at a separate rate or separate PE or whatever metric evaluation you want to use. And I think soon people are going to start valuing full self-driving as its own metric. Now, I'm sure you guys have heard me say this before, but if you have not, if this is your first time watching a video, let me give you a rundown. So where I live, specifically people I know, I live in Michigan, just so you guys know. So there's a lot of Ford and GMs. You barely see Teslas out on the road. There's a lack of penetration here where I live. And specifically with full self-driving, a lot of people I know don't like to drive or would rather do, something else while they're driving, right? But a lot of people are nervous about cars driving themselves. If I just ask people, like, what do you think about a car driving itself? Like, would you be comfortable with that? In which I've done this before. I've asked many people, and they don't trust it for good reason. They don't see Teslas driving themselves. and maybe it's arbitrage to where I live, but I think once robotaxis do actually start operating and Tesla starts to advertise some of these things like the safety facts that full self-driving is safer than you just driving. Statistically speaking, there's less crashes per million miles. Things of that nature, you're going to get a lot more people purchasing full self-driving, and those margins are 100% gross margins. That's where the profits are going to come with Tesla, and I think that's where Wall Street really has it wrong. Wall Street is under this impression that Tesla is fully penetrated everywhere, when in all reality, that is far from the case. So I think there's a lot of upside there as well. Now, if we take a look at the current situation with Tesla and what Ford just said, I think this was pretty interesting. So Ford says that supply chain disruptions are easing as retail prices for vehicles are softening. They go on to say that it's not a big reduction in prices that they are seeing, that the consumer is hanging in there, noting continued strength and pricing power in the company's Ford Pro commercial business. Now, this is pretty similar to what we have seen recently with Tesla. Tesla's actually raised prices recently after dropping them about 25% in the beginning of 2023. You've also seen really good delivery numbers coming out of China, with the current expectation for 444,000 vehicles to be delivered for Q2 numbers. We'll get those numbers on July 2nd. Tesla likely to give us a number well in excess of 460,000 vehicles as per my own estimates. That's going to make Tesla stock go absolutely crazy. Now, if we take a look at some of the option activity as well here on the day for Tesla stock, considering the stock is red today, you are seeing the same essentially positive order value that you have seen as of recently when Tesla stock has been ripping. This is telling me that even though the stock is red today, people are taking this opportunity, specifically hedge funds and institutions, to buy the dip in some of those options with Tesla. People want some upside leverage here for the next move higher with Tesla, and a lot of people are targeting some of those 2024 option expirations, even a lot of options for tomorrow. For the June 16th option expiration, you are seeing a lot of volume. At the money calls, you are seeing 68,000 of the 257.50 calls that got purchased, 77,000 of the 255 calls that got purchased, 125,000 of the 260 calls that got purchased today, expiring tomorrow. And these are looking at the volume numbers. About 60,000 calls purchased as well for the 265 strike that expires again tomorrow. Now, you're looking at 297 orders bought on Tesla today, worth $233.21 million, with a positive order value of 69%, guys. So that is going to do it here for this video. Hit the like button and subscribe to the channel if you learned anything out of this video. You want to stay up to date with everything happening in the markets as well as with Tesla stock. But most importantly, source your comments, questions, or concerns down below in the comment section. If there is something I missed, let us know down below in that comment section. You guys have a great rest of your day, and I will see you in the next one.